All Benny from East West. Just thought I'd take a look at some uranium today. Just update some thoughts. So I'll just start here. I mainly concentrate on CCJ just as it's sort of been the leader. But I'll just today I'll start on the cycles. So depending on which way the general market goes next week, it does look like we've got a daily cycle high here, which we confirmed when we go through this moving average and through the trend line. Now, just in terms of timing, and these are just basic averages. This is the average length of the cycle, which is around about 60 days, which would come in on the 17th of February. And then I sort of just like to plot out one standard deviation around that mean. The orange box is just the expected length. If we're going to go longer than the average length, if we're going to go above that, that would be sort of the average when we run further along. That's just, don't worry about that. What I'm more getting at is it looks like that this cycle is now going to come down, and I'd expect the cycle low timing wise to come in somewhere around here, and it just then becomes a question of whether or not it fails. It's got a long way to come down in a reasonably short period of time to become a failed daily cycle, I would think. Of course, not impossible, but we'd need to see some pretty serious turmoil, I think, to drop the price from its current $27.60 down to below $21. I think what's probably more likely to happen is we're going to get something more like this, and then that would be one cycle, and then maybe we'll get another one. Whether or not that top comes out, maybe it'll be something more like that, if it's going to come off, of course. That's in a bearish sense. So anyway, the short of it is, I think we've topped out for the moment. I'm just waiting for this to confirm as a cycle high, a daily cycle high. Once we drop down through this trend line and this moving average, then we can consider this now a daily cycle. We're on day 44, and the daily cycle length mean is about 60 days. So I've just zipped out here to a weekly chart really quickly, and if you've been a holder, if you've been long for a while, and you sort of you've been holding the stock sort of through here, or you've been buying, do you have a price target to get out if you haven't got already? Now, I would just look at this chart in history, and it's pretty easy to me. What I would just be looking at, what's pretty obviously looks like a pretty, some major tops here in the past, just on a technical basis. Well, that to me looks like a pretty decent sort of target area. Now, I mentioned last week that what I'm kind of expecting the market to do is this, and that I'm kind of just looking for this sort of thing to repeat, though obviously it's not going to shape up exactly the same way, but the point is I'm looking for this sort of three-wave move. So with that being said, I'll just move into the Elliott, and I think this is just back now on a daily. I think the cycles and the Elliott wave here have sort of lined up to pinpoint this top. Now, we know that the market's running pretty hot through here, and you can just see the divergence coming in. That the Williams R% told us that the market was going to struggle to expand much more. The true strength indicators rolling over, and the Cutler RSI is definitely coming off. So that sort of leads us to think that the cycle high is in, but in the Elliott wave sense that I'm looking at, this is where I think there's great potential now for this to come down. Actually, it won't come down in 5 waves. It'll come down in 3 more major waves, down to the sort of areas that we were talking about last week. Maybe not as low as this, but certainly if it can get back below this $20 to $22, I think that would warrant attention, to be thinking about adding. Certainly to be, if not adding, certainly to be on alert that we could potentially bottom out here, and then maybe when we start doing this, that might be a signal that we're on the way. And the pattern would suggest that if this completes like this and we start moving up on our way that you can get into this, and it's got the big potential to run then. But I still think if you're long and holding and you don't really care, well, the only thing I would say is that just be mentally prepared to wear a bit more pain or just more frustration that it's not making the progress that you want, even though you've definitely enjoyed a good period so far this year. But just even when I come down here to the smaller time frame, this just looks like really nice impulse. Like it just channels super well, and we know that everything sort of diverges, and the indicators were telling us that we've just got a big extension in the fifth. Now, people could maybe look at all this and say, "Oh, it's too choppy. It's too choppy. It's not an impulse." Yeah, maybe it's not. I mean, this is super clean. So maybe the argument might be that this is more a 3-wave rather than a 5-wave. It could be, I suppose. I mean, my money's on a 5-wave. That it just sort of fits nicely, I think, for the moment. But then, of course, if this was a 5-wave move, and that's still a big if, of course. If this was a 5-wave move, you'd be looking for down here between $25 and $24. I mean, in a more bullish sense, which we'll have a look at it in a sec, you'd be looking for that, and then you'd be looking to try to initiate some longs, sort of, or you'd be thinking about, can I initiate some longs through here? And even without the Elliott, you can go back and just go, well, is this going to be, old resistance now becoming support? And that would be a fair enough assumption. But that would line up pretty well in the bullish sense. So because to me this does look quite impulsive, and even when you look at it on its own, I mean, it doesn't. You wouldn't expect like super sharp 3-waves. I mean, I guess they do happen, but that just, even though when you drill down into the detail, when you just look at it on a big picture, it looks reasonably clean to me. I mean, you can pick holes in anything, but that looks reasonably clean. So from a bullish perspective, that looks not a bad bet. It's not one I would take personally. That's just not my view. But as it sits here, you've got an impulse up, and then you could sort of make the argument that we've finished a triangle and now we've got an impulse. So if we get sort of 3-waves back down to that sort of area, and then we start going again, well, this takes a bit of credence, I think. Like I said, that's not my view, but I just like to sort of offer both sides, and then you can just sort of pick what you want from that. But look, just moving back out again a little bit, and you remember we were talking about this is how I would sort of then put it together. If we took this as the length of A, and then we came off sort of the bottom of this triangle here, well, the 100% then just sort of lines right up into that zone that we were talking about. Those old tops from way back, and that's why if the market did do this, and it started getting up there, that's why I'd be paying pretty super duper attention to this area as a potential take profit on what has been a large run, because maybe you hold it all the way here because you're absolutely convinced that we're actually going to get, rather than that we're going to get this again. I thought for a time I thought there was a potential that we're going to get a massive run like this, but I think that's waned for me. It's still not impossible, but I think the market would have needed to have done a bit more by now. So that's why I think that potentially we're just looking at that, because the problem is that even if you think you're going to get that first scenario and it's going to run much higher, how are you going to feel if it gets up here, you don't take profit, you're thinking, yeah, more, and then all of a sudden we're just, we're failing back down like that. It's not going to feel great knowing that you left all that money on the table, especially if you took it off and then you'd reload. But it's got to be up to you what you do. But just for me, as the pattern suggests, that's kind of what I'd be thinking about with Cameco. So, like I said, this triangle situation is possible, but it's not my favoured scenario. For some of the reasons that I mentioned last week, I still think that there's just one more down here, and then we can think about the run up again. So even if we came back down, let's just say for argument's sake that we came back down here, even that low, I mean that's pretty low, of course, but even then, the 100%, even off this, would still lay. So, you're talking about a range between $40 and $45. That would sort of be still the sort of area that you'd be thinking about. And there's nothing to say that, what if we just came back down here to sort of $20? We're still sort of in that target zone. So that's just how I'm viewing it as it sits. The cycles are suggesting that we do have a bit of a short-term top in here. The Elliott wave to me suggests that will probably come down, and then the next cycle will probably fail. So that remains to be seen. So I'll quickly just jump across here to Sprott as well. Now you can see the cycle here is much more pronounced, that we've already had the close through the trend line and the moving average. So this day 42 is definitely much more the cycle high, is a confirmed cycle high here. So, I'm expecting a drop down in terms of timing. The 13th of Feb, the 3rd of March would represent the average cycle length, and of course nothing says it's got to go the average. That's just, you add them all up, you just take the average and you just sort of work off that. That's what the average cycle does. But of course, just because it rains an average of 6 days in June doesn't mean that you're going to get 6 days of rain in June. It just means it's an expected average. So it's just something to look out for. But the point here being is this is more pronounced. So I'm expecting, that's just the timing that I've got marked out, and we'll just see what the market's doing as it approaches those sort of dates. Now the Elliott wave on this is actually, it's a bit more tricky, I think, because to make the bearish case is not as clear cut, I don't think, as what the bullish case is. So the bullish case would suggest that we've actually finished the correction, that even though this looks like a 3, you can definitely make a 5 out of it. You've just got to move in and have a look. But even though it looks like 3, you can sort of go 1, 2, 3, 4, 5 to make a 5 wave, to make an impulse up. And this is clearly a correction down here for an ABC. And then this is very clearly an impulse when you move in. So to me, it looks like you've got the one wave up, the ABC for the wave down, or maybe you'd call this a WX. I mean, that looks like a straight rip. It's hard to pick out waves in that, but this is corrective, and then you got another move down. But this looks definitely impulsive. I mean, I'd guess you could probably say 1, 2, 3, 4, 5, something like that. But then we've got this straight drop back down. So that looks. The problem then is you got 5, 3, 5. So the bullish case looks a little bit more tricky to make out than the bullish case looks a little bit more straightforward to me at the moment than the bearish case does, which is why I'm not real sure on the Elliott for Sprott at the moment. I think to make the bearish case, you'd have to then call this a 3 wave, which is fine. I think you could fit it into a 3 or a 5. This is definitely a 3, but because this is 5, I would suggest that then that would mean that we've got to go down like that, and then we've got to come up for one more 5 wave up like that before we come off, and that just doesn't fit the pattern that I'm seeing in the overall market. So even though that would be how I would think it pans out before we then come down, I don't have a lot of faith in this wave count at the moment. I don't think it's. I think the bearish count, it hasn't revealed itself properly yet. Let's just say it like that. I mean, maybe you've got to say WX, and then this is. But then what is that? Why? Because if this is A, then that's 5 waves up. You can't count that as 3, which means if this is going to be an A wave or a W, then this has got to be 3 waves as well. So that's why I'm saying it's, and that's just not fitting with what we're sort of seeing through the market at the moment. I just think that this is more likely to head down. But I can't make the proper case for it. So sometimes the Elliott, at times the Elliott's not very helpful, and this is kind of one of those times where it's not helping us, so we just stick it aside. and the cycles are looking pretty clear to me at the moment. That the indicators told us that we're running out of gas. So now we wait for the RSI to travel back down, and then we just sort of look for a bottoming sometime in this time zone. So look, that's it. I hope you got something out of that. I'll update things as things become more clearer. Thanks for watching. See you next time.